Welcome back to Crypto Labs News. Today, we're diving into a massive prediction that has the XRP community buzzing. Stephen McClurkin, CEO of Canary Capital, believes that up to $3 billion could flood into spot XRP products within just the first 24 hours of trading. Now, using Jake Claver's theory on XRP's market cap multiplier, what kind of price impact could that have on XRP? Could we be looking at double, triple digits, or more right from day one? Let's break it all down. Before we jump into projections, let's look at how this has played out for Bitcoin and Ethereum. When their spot ETFs launched, the early inflows were huge. Bitcoin futures alone saw over $1 billion in inflows on day one, ranking among the top ETF launches of all time. The second Bitcoin futures ETF still brought in around $100 million on its first day. Stephen McClurkin said he wouldn't be surprised if XRP actually outperforms those numbers, estimating somewhere between $2 to $3 billion in inflows during the first 24 hours. Paul Barron, during his discussion with McClurkin, pointed out how XRP futures on the CME grew incredibly fast, reaching $1 billion in volume quicker than any other crypto. That kind of traction is what's fueling all this excitement around a potential spot ETF. Now, Jake Claver brought something fascinating to the table: the XRP market cap multiplier. This concept focuses on available supply, not total or circulating supply. According to Claver, there's likely less than 2 billion XRP available across exchanges right now. Retail investors hold a small portion, maybe 1.2 to 2 billion total, with his firm, Digital Wealth Partners, managing around 200 million of that. Here's where the multiplier theory gets interesting. If demand suddenly surges, let's say $3 billion flows into XRP ETFs, the available supply could drop by half in one day. That means the remaining liquidity on exchanges could shrink to about 1 billion XRP, creating what Claver calls a 100x multiplier effect. To put that into perspective, if you applied that multiplier to $3 billion in inflows, XRP's price could theoretically skyrocket toward $150 per coin. If even less XRP remains on exchanges, say 500 million, the multiplier could stretch to 250x or more. Of course, these are extreme scenarios, but they're worth examining, especially when we look at what happened with Bitcoin. When Bitcoin spot ETF launched in early 2024, analysts predicted multipliers as high as 50x to 100x. But in reality, the result was closer to 4x, mainly because institutions deposited Bitcoin into custodial accounts in anticipation, meaning there was actually more liquidity available to sell, not less. So, here's the key question: would institutions behave differently with XRP? If the same thing happens, if large holders flood the market to sell into those ETF inflows, the multiplier effect could be far smaller than retail investors expect. It's exciting to think about a $100 or $150 XRP, but we have to stay grounded. Liquidity, institutional behavior, and market psychology could all temper those massive multipliers very quickly. Even if there is an initial surge, history shows that such explosive growth often cools down as markets rebalance. Speaking of the broader picture, Brad Garlinghouse recently addressed the idea of a Fedcoin, a potential digital dollar. With the US currently blocking the Federal Reserve from launching a CBDC through the Anti-CBDC Act, some speculate that the government could turn to private firms like Ripple to issue a digital dollar using blockchain infrastructure already in place. Garlinghouse explained that Ripple's XRP ledger is open source and built to support multiple use cases, not just cross-border payments. Ripple, he said, is essentially a blockchain infrastructure company, and payments are just the first vertical they've focused on. Like Amazon started with books, Ripple may expand into new sectors once it dominates cross-border settlements. So could the US one day call Ripple to help issue a digital dollar? Garlinghouse didn't confirm that, but he did say that a neutral asset like XRP would still be essential for settling transactions between central bank digital currencies worldwide. He emphasized that XRP's speed, scalability, and cost efficiency make it a superior option compared to Bitcoin or even Ethereum for global payment use. Now, beyond the institutional side, there's also major movement happening in DeFi with XRP. Hugo Filion, CEO of the Flare network, talked about new opportunities for XRP holders. On Flare, users will soon be able to lend, borrow, trade, and even earn yield with their XRP through protocols like Firelight. Holders can stake their XRP, earn yield, and even create stablecoin versions of XRP for DeFi use, a development that could expand XRP's real-world utility. However, a quick word of caution: if you plan to stake or lend your XRP for yield, be sure to understand the risks. If the platform fails, your assets might not be recoverable. Always do your own research and talk to a financial advisor before locking your XRP anywhere. Lastly, despite all the innovation happening around Ripple, some media outlets continue to throw shade. Even Blockworks recently lumped XRP in with so-called meme coins like Litecoin and Cardano. Their argument? That only Bitcoin and Ethereum will remain relevant long-term. But really, what isn't a memecoin these days? The logic seems biased, as if only their own holdings matter. Every time XRP gains traction or new partnerships emerge, critics try to drag it down. Yet, year after year, XRP remains one of the most used digital assets for real financial utility, not hype. So, where do you see XRP heading in the next 5 years? At what price would you consider selling, or are you holding long-term, waiting for institutional adoption to push it higher? Drop your thoughts in the comments below. Thanks for tuning in to Crypto Labs News. Stay smart, stay bullish, and as always, see you in the next update.